Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. In the last 24 hours, the Australian dollar has continued to swing in and out of losses and gains as the market slowly mulls over the recent release of the minutes that was on Tuesday from the RBA. Along with that, we have also the release of the Australian unemployment number. Now, the market is still pondering whether the RBA will cut rates in November, considering such a low number. But at the moment, the resistance, though, from a technical point, is still holding respectively from 68 cents. I do feel that any advances towards that region should fail, as it challenges also the 60-day moving average. So I feel the market will maybe try the top side and fail, and then look back towards the downside of 67.40 and then to the target of 66.70. The dollar index has weakened further overnight. Now, the US dollar, which measures the greenback strength against a basket of 6 major currencies, has actually seen the euro, which is weighted at 57.6, increase to the top side, but still contained by the resistance of 111 figure 15. It is assessed that while the market remains to the index, that is above 97.50, trading around 97.60 at the moment, is that the market should stage a recovery in the US dollar and see a rejection from this level and look back to the downside. The support, though, to get the bearish case and abandon the bullish sentiment is the trigger level at 109.75. Since the break of 108.60, dollar yen has failed to present further bullish challenges towards the upside and now backing away slightly. It is assessed that as long as we don't get a break above 109.05, then the bearish case holds. And I'm looking back for a pull, that is, pull back to 108.40. Now that is the trigger level. If it breaks that level, then I'm looking down towards 107.15.35. The pound rallied further overnight and posted a fresh high of 128.76 before slipping back into a consolidation pattern. It is still uncertain to what the outcome is going to be for the Brexit, although the deadline is still on the 31st, and UK Prime Minister Boris Johnson has clearly stated that he doesn't want to go beyond that date. So they're working very, very hard to get this together. Let's see if it can come out as a softer landing. Then therefore we could see it move up to 130. Playing or trading, that is, with the sterling, I do stress very much to the case of the whippiness as being the ranges could be anywhere from 200 to 300 points or pips because of the market volatility coming into the close of the Brexit. So do beware how you trade this market. Gold still neutral and still questioning whether or not we've found a base, which is close to around 60.70. Nevertheless, technicals aren't that bullish. So I'm still going to sit out for the moment and see how the market plays. But, of course, though being neutral, I shall still be monitoring for renewed opportunities. And finishing off with oil. Well, the market took another stab at that level of $52.65 and holding just by a thread. I feel the market should stage a recovery, but there is still some room to get towards 51 if this level fails to hold, and then may see buys from the bottom of this range, which is around 50.5 to 51. That wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to this new day.